Now, if you've been following the market, it has been a rough couple of days. It feels like every single day the market just keeps getting lower and lower and lower with no end in sight. If you've been following the news, you know that the whole reason this sort of started was because Trump put on some tariffs and said, hey, Canada, Mexico, China, I'm going to throw these at you. And then Canada, Mexico, and China were all like, bro, you're going to put tariffs on us? We're going to put tariffs on you. Everybody immediately started panicking and saying, oh my goodness, there's so much uncertainty in the market. We have no idea what's going on. Tariffs this, tariffs that. The economy looks like it's slowing down. There's a jobs report on Friday. What about inflation? Is the Fed going to cut? And so all the neuroticism and bad vibes in the economy just sort of culminated over the last few days. And this is the result. Over the past month, CrowdStrike has dropped 21%, and it's down about 15% since its most recent earnings report. Now, the question is this market reaction founded on facts? Is it founded on logic? Is the price of $333.50 a logical reaction to market news? Or is there an overreaction here and actually the company is worth a lot more? That's what I'll be diving into today. And we'll come to a conclusion that either allows us to dodge a bullet, that is CrowdStrike, or it allows us to make a lot of money on it. Let's dive in. Alrighty, so looking at the overview of the earnings, in Q4, CrowdStrike brought in $1.06 billion. That's about a 5% quarter-over-quarter growth and a 24.7% year-over-year growth. That beat analyst expectations by 2.3%. The earnings per share had a massive beat of around 20%, coming in at $1.03 per share. That's up 10% quarter over quarter and 27% year over year. That's phenomenal. This was a great earnings report for Q4. But where investors started to get nervous was the forward guidance of what CrowdStrike was telling us they're going to earn next quarter in Q1 of fiscal year 26. So CrowdStrike reported that they were expecting revenue for Q1 fiscal year 26 of $1.1 billion. That's actually more than what we got in Q4. So that's growth, and that's pretty good. That's pretty much in line with what analysts were expecting. What really broke down CrowdStrike was their guidance on their EPS. Their EPS, they're expecting to be 65 cents a share, which is 25% less than what analysts were expecting. Analysts were expecting 96 cents a share. If this EPS number is what's panicking investors, let's dig in. Why exactly is CrowdStrike expecting this 25% drop in expected earnings per share? It's hard to base all of our conclusions off of just one quarter, though. So it'll be a lot more beneficial to see what CrowdStrike is expecting for their full year guidance for fiscal year 26. Going into this last earnings report, analysts were expecting guidance of $4.77 billion, and CrowdStrike delivered. They're expecting revenue between $4.7 and $4.8 billion, which is right in line with what analysts are expecting. But once again, we see the full year guidance for the EPS to be about 25% of what analysts were expecting. 442 was the expectation for analysts, but the company guided between $3.33 and $3.45. So clearly there's a drastic drop here, and now that we know that this isn't just a one quarter drop, let's really dig in to see what's causing this compression of margins, what's causing CrowdStrike to divert their revenue away from their net income. What's costing the company more that's lowering this guidance? Are they issuing more shares? Is their tax rate going to be higher? There's so many things that CrowdStrike could be spending their money on. So the question is, are they going to be spending money on things that are productive for their company? Or did their underlying business model have a fundamental change that changes the story? Is cybersecurity going to be as profitable as we predicted? That's really the question we're trying to answer. So I dug through the earnings transcripts and I pulled out a few of the biggest points that really point to exactly what this money is going toward. The first is the short-term impact from outage-related costs. They estimate that to be around $73 million. Now that's actually more than what they were originally expecting. I think they originally guided about $60 million. However, I don't know how you were invested in CrowdStrike through the outage, or maybe you bought in after the outage like me, and you weren't expecting this. Guys, they got to pay the piper somehow, right? They've got to pay the price for what happened. I mean, it was negligent, right? And it was a mistake and it's over. But when you have a global outage, it's just expected that you're going to have to pay a lot of money to try and defend yourself, hire lawyers, et cetera, et cetera. I mean, I can't even imagine all the expenses that's going to go into protecting the company and ensuring that they don't get sued and go bankrupt, or owe money to another company for the rest of the company's existence, right? They made a mistake and they're getting through it. It's a small price to pay, especially considering that this year they're probably going to rake in somewhere between $4.7 and $4.8 billion. I'll pay the $73 million, that's fine. I'm good with that. The second thing is, now that this outage happened, CrowdStrike is offering their customer commitment packages, or CCP, which sounds like Chinese Communist Party, but it's not. It's the customer commitment packages. And so CrowdStrike offered $43 million in flexible payments to their customers as a part of their customer commitment packages. And so in my last video on CrowdStrike, if you go and you look back at that, I said that these customer commitment packages were going to more deeply entrench their customers with the CrowdStrike platform, with the Falcon platform. And so that's exactly what's been going on. So while they did have to provide $43 million worth of services and products to these companies, now these customers are relying even more on CrowdStrike. So when the customer commitment packages actually dissolve and they are no more, well, CrowdStrike's revenue is going to start picking up, and the customers are going to be more reliant on CrowdStrike, which is a net benefit. So again, 43 million, I'm perfectly okay with that. Now, the third reason that I saw in the transcript was personally what I believe to be the most important reason, and hopefully the one that they're investing in the most. CrowdStrike is taking the money that they're making and they are reinvesting it into the company. They're bolstering their marketing. They're investing in AI-driven innovations, including Charlotte AI. Charlotte AI is essentially an AI that allows people who work in cybersecurity to be better at cybersecurity. So if I'm just Joe Schmo and I have Charlotte AI, I can ask it questions and have it help me do my work. And now my productivity is increased. That's the whole point of Charlotte AI. Is basically, I'm going to help people that work in cybersecurity do better, find breaches, stop breaches, and do my job. They're also expanding rapidly in cloud security, identity protection, and next-gen SIEM. This is essential. These are their fastest growing markets, and the fact that they're reinvesting in it is super promising. And the last part is platform resiliency improvements to strengthen security infrastructure. I'm sorry, guys, if you aren't expecting a growth company, first of all, that doesn't even pay a dividend, to not reinvest its capital back into maintaining a technological edge over its competitors, you need to get out of growth investing. You need to get out. I'm sorry. If you can't stomach moments like this where their EPS and their margins or whatever are going to be contracted because they're reinvesting back in their company, maybe buying individual stocks, maybe being a CrowdStrike shareholder is not for you. I don't know what you were expecting. So while these large investments into their services are going to hurt their EPS next year, what these investments are going to benefit is the long-term advantage CrowdStrike has over its partners. Cybersecurity is an extremely competitive market. You have a lot of companies trying to fight each other for the top spot. And that's what CrowdStrike is doing. So you know what? Dude, I don't care about the EPS, man. You guys aren't even paying a dividend. You guys are a growth company. You're growing extremely quickly. You're in a market where every single company is trying to slug at each other. And to stay ahead of the competition, CrowdStrike needs to ensure that everything that they're doing is done well. So the more that they can build out their platform, their innovations, their AI, their marketing teams, the more money that they're going to make next year. So in the short term, yes, this is going to put the company under some pressure, but not too much. In the long term, though, this is an extremely good sign for CrowdStrike. They're putting their money where their mouth is. They're investing into their company. They know that the money that they put to good use is going to be used to really accelerate their growth. The fourth reason is seasonality and net new ARR timing. Now, I'm not really concerned about this. Most companies have some level of seasonality depending on the industry that they're in. Some companies are just more comfortable buying things at certain times of the year. Consumers, for example, buy a lot of iPhones at Christmas to give as gifts. So seasonality is a normal thing. I'm not really going to dig into this one, but as part of the earnings transcript, I thought I'd mention it, but I won't go too deep on it. I really don't think it matters that much. The fifth reason, also relatively unimportant, the tax rate is a little bit increased. They said it had a 19-cent per share impact on EPS. You know, it's taxes. What are you going to do? The only things that are guaranteed in life are, death, taxes, and Alex Romano posting another CrowdStrike video. So I'm not too concerned about it. It's just part of the game. We're all Americans. We pay taxes, man. Whatever. So now I've given you all a pretty good picture of what happened during the CrowdStrike earnings call and why investors are pretty upset and why investors are selling out of the stock. But the question is, what do we do as rational, intelligent people with this new information? CrowdStrike is a relatively new company. It's an $80 billion market cap. It's growing very rapidly, and it has a lot of competitors. And to stay ahead, they need to consistently build out their products and services and maintain an advantage over their competitors. The only way CrowdStrike's going to maintain themselves as a winner in both AI and cybersecurity is by consistently pouring money into growing out these parts of its company. So, the stock sold off by 8% post-earnings. It's now down 15%. from earnings date to now. But honestly, I think that most investors are just way too focused on this short-term EPS miss in Q1. When there's bad news for a growth company, there's usually a gigantic overreaction. And this is exactly what we're seeing. CrowdStrike stock should easily be above $400, and the fact that it's at $333 today is just telling me that there's a lot of fear in the market, and we can't really get hung up on asking ourselves, oh no, why is everybody selling out of CrowdStrike? Why is this happening? Why is the price going down? Whatever. We have to be able to stomach times like this and double down in the positions that we feel confident in. And for me, CrowdStrike is one of those positions. It's my number 2 position in my portfolio. I just bought a ton of CrowdStrike today. I bought CrowdStrike yesterday. I bought CrowdStrike the day before. I am slowly buying in more and more, increasing the size of my position. And CrowdStrike is now about 20% of my portfolio. I think the market is misinterpreting what CrowdStrike is doing for its future growth. And most importantly, I think that there's just a bit of market risk going on here. You know, with tariffs, everybody's selling, everybody's really nervous. Everybody's taking gains, and CrowdStrike is kind of getting caught in the crossfire. I wouldn't say the earnings were amazing, knock your socks off, but they're still on track to do the amazing things that I expect them to do over the next decade. They haven't changed their $10 billion ARR timeline. They're still growing really fast, above 20% year over year. This is a great company to be a part of, and I'm very, very happy to be an owner, and most importantly, I'm happy to buy more when the market overreacts and sells it as much as it has been. Ladies and gentlemen, the market is a crazy, wild place. Sometimes when you're riding the bull bucks. The bull thrashes its head, and sometimes you might get caught by a horn. But in this case, I think we might have just gotten nicked. So yeah, CrowdStrike is down a ton, but I'm extremely confident that this is a small bump in the road. It's a small bump in the growth story, and overall, this company is on to do very amazing things. Enjoy the discounted prices in the market, and I will see you guys next time.